forward to it, Kent. Thank you. QE3 is happening right now. Are you ready? Do you have any clue what I'm talking about? If not, don't worry. Financial expert Chad Tobin from Slagle Financial is here to fill us in. Nice to have you back, my man.
It's always great to be here.
To make some sense and bring some interest to something that could make a lot of people's eyes just glaze over. But this is important, so we're glad you're here. What is QE3? Why should any of us care about it?
Well, QE3 is basically another attempt by the Fed to stimulate a slowing down economy. And, you know, all of us, or a lot of the investors, are happy because we've seen the markets come back. So we kind of think the economy's slowing, but what they're looking at is it is a slowing economy. And it's another attempt for them to just rev up the economy again, just like QE1, QE2, another stimulus program. So really that's what it is. And why should we care is a couple reasons. It's buying, the Fed buying $40 billion a month in mortgage-backed securities. That's adding on their balance sheet. And that's in addition to what's already happening, and they're calling it operational twist, which is already putting long-term bonds of $45 billion a month to the balance sheet. So this is an additional $40 billion a month, Matt, that is being thrown into the economy to try and spur this or stimulate some economic growth. It began last Friday, or Friday, September 14th, so we're seeing and we're expecting probably about $23 billion for the remainder of September, and then each and every month after, we're going to see another $40 billion thrown into the economy.
So they're really trying to throw some high-octane fuel into the tank to get things moving, to get the market to be a little less stagnant. But you look at, you mentioned this, the S&P 500, 500 really big companies, 100 of those, 1 out of every 5 roughly, is trading at the highest value it's ever traded at before. Are we going too fast, too quickly?
Well, and I think you asked why should we care. You know, they haven't put an end date to when they're going to stop pumping this $40 billion in, so that's kind of up in the air. When we talk about what are economists looking at, and the effect of this is really, you know, the effects are going to be minor and the risks are uncertain. So what we're seeing now, as you mentioned, nearly 1 out of every 5 of the S&P 500 companies are at their all-time highs or within 5%. So what are we focusing on with our clients, and what are we talking about is right now is a great time to reevaluate the risk you're taking. And if you've had some underperforming stocks in your portfolio, or companies or funds, now may be the time to kind of reallocate how those holdings are, but also you know, scale back that exposure you may have in some of those equities and risk of that portfolio. So now may be the time to really take a close look at where you stand.
And that's why folks like you guys are around. And we've had you on several times. You never really talked about this. What's it like for somebody to come and visit your office? What's that experience like? What are they going to walk out of there armed with?
Well, I mean, that's a great question because, you know, we really pride ourselves as Slagle Financial, a retirement planning firm. So the majority of our clients are anywhere from 5 to 10 years from retirement, or maybe they've already entered retirement. So their mindset in retirement is slightly different than the 20, 30, 40-year-old investor.
Sure, yeah.
So that's where we focus. And somebody coming into the office, I think it's very important. It's not a one-size-fits-all. It's about sitting down, listening to your goals, your financial dynamics, your family dynamics, your risk tolerance, and taking a lot of these things into perspective. And it's not one meeting. You know, we're going to take a meeting, a process approach to really kind of figure out exactly what you're wanting to accomplish and how comfortable you are with risk and your safe ratio.
So you're going to walk out with peace of mind, hopefully. I'd like to retire next week. Ready? Go. No, I'm kidding. Chad, thank you very much. You can contact Slagle Financial by calling 888-294-9248 or slagleFinancial.com. Check them out online. We will be back in just a bit, but first, time for this week's Brown and Crouppen Legal Minute.
Are you worried about frivolous lawsuits? A lot of people are. A lot of people believe that our courts spend most of their time shoveling money into the pockets of crooked people who make frivolous claims. But guess what? That's a lie. But don't take my word for it. take the word of the insurance industry, the very people who invented the myth of frivolous lawsuits. See, a while ago I spoke before a group of insurance adjusters from several major insurance companies. I asked them point blank how many frivolous claims they paid. They laughed when I asked and told me proudly that they didn't pay a penny on frivolous lawsuits because if they did, they'd be fired. So, tonight, St. Louis, rest easy, because the myth of frivolous lawsuits is just a story insurance companies made up to scare you. I'm Terry Crouppen. Have a great day, St. Louis.
Select segments of Great Day St. Louis are available right